Hey, it's Tim. Looking at markets around the emerging globe that are about up today, along with commodity prices, despite the fact that the dollar is at levels where we expected to see a bounce, and in fact, we are getting a small bounce. The 200 moving day is proven to be a place where technically, at least, the dollar is finding a bit of support. Having said that, I don't think you have a lot of impetus to see us trade much through this and actually expect that we break down through this, and ultimately this is going to continue to be very positive for commodities. In fact, probably more so, because the expectation was this was a bit of a range trade. If we break through, this really is a breakdown in the dollar, so something to watch. And the commodity space, the softs, whether it's wheat, whether it's sugar, wheat definitely has been in the headlines. Russian fires, droughts, adding to prices which are up now about 50% off the lows. The ways to express this, I think, are either outright in terms of the underlying commodities, look at the DBA and Deutsche Bank's commodity ETF, or play some of the nitrogen players. Fertilizer, nitrogen, this is a great way to get exposure to higher crop prices if you actually believe this is where we are headed. As we see markets break on through, we see India, we see a 17,750 level in the Sensex that actually was broken through, and I think that's certainly very positive. Always watching inflation in India, and as we talked yesterday about China's fresh inflation concerns, rumors of a 3.5% CPI print in mid-August for July is something that India is going to take to heart, so keep an eye on that. At the end of the day, I think watching non-farm payroll tomorrow in the States is always going to be a very important number. The ADP numbers out today in the U.S. indicate that we may actually get slightly better private job growth than expected. Expectations of around 90,000 jobs added in the non-government private payroll sector. Today's numbers at ADP indicate that actually may be a little bit higher. So keep an eye on that. At the end of the day, I think the question here is, are we getting enough of an economic read to believe that we can break through what was the recent highs? Certainly 1220, which is the S&P level back from April, is something that I don't think a lot of people expect we're going to challenge in the short run. In the meantime, focus on emerging market companies that have released very good numbers and are delivering free cash flow levels that we haven't seen in a long time. Thanks.